Okay, so open the chart, 4-hour chart, it doesn't matter. Look for the last trend. Here the trend line, the main trend line has been broken. Don't draw outer trend line, inner trend line or something like that. Just draw the main trend line. Okay, and here we can see it, the new trend. It's bearish because we see lower high, lower high, lower high, broken the main trend line. Okay, so starting around this area we will look for to sell only. And since we are trading on higher time frames and we will use Fibonacci, your risk reward ratio will be usually more than 1 to 3. So the main trend line has been broken. Just place your fib. Initially it would have been here. Put your pending orders at 50 and 61.8. In this case wasn't triggered. Adjust your fib on the next day when you come to your computer, and of course you can delete those pending orders or just move it. Different setup. Your stop loss level will be the same. So moved again the pending orders at actual 50 and 61.8. Wasn't triggered. Adjust it here, and here in 2 or 3 days later your pending orders will have been triggered. This is your initial stop loss. Okay, you've entered here short. You could let your position to run by using the opposite as a counter trend fibs, this blue, starting from here, drag to here, release, and this is your initial profit target, 127.4, 132.8. This could be your second profit target, but you don't have to aim both of this profit target. You can use only one. For example, initially use only 127.4. Sorry, I misclicked. This was our fib, and I will change the color to yellow. Okay. So use this as your profit target. You could manage here the position. If you will come back the next day and you will see the position is running in profit, you could move your stop loss from here to here using your entry level minus spread minus few pips. And for long position, use your entry plus spread plus few pips. In our case here, it's the entry level minus spread minus few pips. So in this example, if the price action will work against you in the next days, your position would have been stopped. It did in this example, and your position would have been closed by stop loss hit with let's say 5 pips in profit, but you didn't cash in this huge stop loss. Okay, or you could use the initial stop loss and first profit target. Enter here short by pending orders. This is your stop loss, this is your take profit. Just go to the next pair and do the same thing. Questions?
Sounds good. On the hourly, I could do it. Show me the hourly too.
You can do it on any time frame. On hourly, you can adjust properly this stop loss by managing the position. So if you enter 4-hour chart, you can lower the time frame to 1 hour and let your chart like this every day. And you can use the break-even strategy. In this case would have been triggered this new stop loss. Here was initial stop loss, sorry, and here would have been at entry minus spread minus few pips your second stop loss level. Okay, let's say it wasn't triggered here, you could add positions on the same trend, although it's not indicated if you're going to use many pairs. Just open one trade on each pair and will be enough for you. Okay, so you could move on the next days. The new stop loss level will be here, could be here, would be here, and so on, until eventually you will trigger the last stop loss level or the initial profit target. Let's say you're only one profit target, because you will use only one, 127.4. By using this strategy, you will see that even if you let this initial stop loss, you will have from here to here 90 pips, and if you would have entered here short until here, you would have had something like 180 pips. So it's 1 to 2 risk reward ratio. Of course, you can decide if you will open the trade by seeing this kind of swings, because this risk reward and this amount of pips will be different based on the length of the swing. So in this case, it wasn't a good swing for the right risk reward ratio. If you will check the swing, and you will see initially on the Fibonacci that this is your potential entry with pending orders and this is your profit target, you can calculate yourself the money management before placing the pending orders. If it's a risk reward less than 1 to 3, don't take the trade, or use a higher profit target. In this example, since here you had 90 pips as your stop loss and only 180, which means 2 times bigger, as your profit target, probably you should have used this 161.8 as your profit target. So your initial stop loss, your entry, and your profit target, just to be suited to your money management rules, at least 1 to 3 risk reward ratio, without managing the position, without anything. Managing the positions in general will will modify your strategy statistic. For example, if this strategy is 7 from 10 trades in profit, just because you will manage the positions like this, moving the initial stop loss to your entry minus spread minus few pips, in this example, as you can see, your stop loss would have been hit, would have been a profitable trade, only 5 pips in profit. But in this case, even if you will have 8 positions of 10 in profit, that 8th position, profitable position, would have been only a 5 pips profit position. So this is why your strategy will be different. If you will have here 7 from 10 trades in profit, by considering something like 30 pips as your stop loss and 90 pips as your take profit, if you will modify it like we did here, you will have 8 possible from 10 positions, but you will have 7 positions or 90 pips, multiply it with 90 pips as take profit, and you will have 1 position, multiply it with only 5 pips in profit, and of course you will have the other 2, multiply it with 30 pips as your stop loss. This is by managing the positions. Even though here the statistic might look greater than this one, it's possible here many of these 7 initial positions to become this kind of apparently profitable positions. But in this case would have been triggered, so you should count this as your stop loss, as your losses. So this strategy would have been actually a 6 to 10 strategy, just by managing the position. That's why just run it for a period of time just to see how it's working by using only the 4-hour chart, initial stop loss level, entry at 50 and 61.8 just to enter the trade, because you won't know if the price action will stop at 50 or 61.8, and use 127.4, 132.8 as a standalone support or resistance zone if the risk reward ratio will be at least 1 to 3. If it isn't, use the next profit target, which would be 161.8, and this is a 7 from 10 trades in profit strategy based on my own statistic. And if you will use the right risk reward ratio, it is in the direction of the trend. Just use the swings, the heights and lows for the opposite, for the bullish trend. Here use lower highs that are closer to the main trend line. This is our new trend line. Main trend line would have been like this initially, okay, initially like here, would have been triggered, would have been broken here, but it is still below the main trend line. Okay, so here was a good opportunity to go short. In case you didn't, because of this huge stop loss, just consider any swings, and here, as you can see it, you already have had few opportunities. You see it? This is 1-hour chart. On 4-hour chart we didn't, because here was NAV retracement, adjusted here, NAV retracement, adjusted here in few days, and then we had to wait another 2 or 3 days to these pending orders to be triggered at 50 and 61.8. But on 1-hour chart you would have had this opportunity. You can lower the time frame just to find a smoother entry. You might be tempted to do this initially because you will have a lack of patience by testing this on higher time frames, but please try it on 4-hour chart. Don't lower the time frame unless you want to manage the positions.
So 4-hour chart.
Exactly. 4-hour chart, draw trend lines. Below, look for sell with pending orders. Above, look for buy. Your stop loss level will be that lower high or higher low. In our case, it's a lower high that is closer to the main trend line. As possible, choose those tops of or bottoms of the swings that are touching the main trend line. Like for example here, this is the new adjustment because the price action formed actually a lower low. We need to adjust this main trend line. This would have been a new opportunity to sell in case you would have exited this position. See, again, sell 50 and 61.8 stop loss level. Again, opportunity to exit the trade in profit. Again, price action broken this area right now, but here price action forming a new lower low. So this is the main trend line, which means here you have the opportunity to sell again. 50 and 61.8 stop loss level. Of course, take profit probably would be around this area. With this strategy, you will lose if you will choose the right swings to draw your fibs. You will have one losing trade when the trend will change. Let me clear this and this one and these lines. Let's go back to 4-hour chart.
Hey, you could see the area where the confluency.
Yes. Don't try to add in this strategy other tools. There are lots of tools you can use
just keep it simple and just do
keep it
the
simple
61.8.
and do the things automatically, you know. You need to focus on this flip the coin. This
Just
is
flip the
your only
coin.
duty. You are flipping
Okay.
the coin. Of course, here you will watch to buy above the main trend line and sell below using fibs. But it's just the same specific things. Like I wake up in the morning, I don't know, I make my coffee or something. It's a daily routine. I open the platform, I draw my trend lines, I draw my fibs, I place my pending orders, I close my computer and go away. You know, this is what
I'm
we
gonna,
do.
I'm gonna, I'm gonna, I'm gonna do it. I'm gonna document it. I'll let you know. I'm gonna document it.
Okay, okay. Let me show you here the potential loss for this trade. If, for example, this is the swing, okay, this is the last swing. Let's say eventually here retest it. Let's say done it like this, and in the end we're breaking this main trend line. If here you will see a retracement like this, and then a breakout here by forming a new high, that means the new trend is long. And by using this strategy, you will lose money here, because here you are again looking for a sell in this area. Like for example here, if you would have used this swing to draw your fibs, this would have been too far away from the main trend line. And you've entered the 50 and the 61.8, and your position would have been closed by stop loss here. But if you would have used this level or this one or even this one, because those are closer to the main trend line, let me delete this to see this one better. You would have entered here short at 50 and the 61.8, expecting that the trend will continue to go down. And in this case, if the main trend line will really be broken, you will lose money on this particular trade. And that could be one of these three from 10 losing trades. When the trend is changing, you can lose money with this strategy, because you've sold at 50 and 61.8, and this would really be a real, not a fake, broken trend line or trend line breakout. Questions?
So when the trend line breakout, you do the same thing.
You do the same thing. If the trend line will be broken and you see it here as a swing, you can expect always that this will be a fake breakout. Okay, so you are still selling here at the 50 and 61.8, but here in this example you cannot place here your fib like this. This is a big bullish swing. So we decided we are below the trend line, the main trend line, so this means sell, 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 sell. Your last opportunity of sell would have been here, let's say like this, and you sold the 50 and the 61.8, and yes, your position would have started to run against you, but you still have time until this level as your stop loss. But if you will see this position going like this and this level, this is the swing that formed the breakout of the main trend line, retesting it, and after that made a new high. That means the new trend is bullish. This is the right confirmation, this level here, that the new trend is bullish. So in this moment we will stop to take short positions for this pair, and we will start to add long positions like this. We couldn't because here wasn't confirmed, but here This is the swing that formed the breakout. We couldn't buy here because was possible to see here a fake breakout of this bearish trend line, so we couldn't use this to buy 50 and 61.8, but we will wait here for the next swing like this. This breakout was our confirmation for going long, so we will use this swing to buy 50 pending order 61.8. Buy, exactly as we did it here below the main trend line.
Okay.
Exactly like this we've done it here. Of course it wasn't a correct drawing of the main trend line. Oh, actually it was. I thought I didn't count it. No, it isn't. This isn't a good main trend line, but it's as good as for our example. Exactly like here. This is the swing that formed the breakout. Until here we was in a very bullish, so we bought using fibs. Until here at this level, sorry, like this, we've
Okay.
we wanted just a second, I'm checking something about these swings. Here we used this to buy, to keep buy, and here we've started to lose money with this strategy. Was that that situation when we wanted to buy 50 and 61.8, but this time the trend line has been broken and our stop loss would have been hit because we've added the Fibonacci to buy 50 and 61.8 and the price action went down, so we've got stopped around here. Again, here was the swing that formed the breakout, and here we've already received the confirmation that the new trend is short because the price action closed below this new lower low. Back then this one was new lower low. We couldn't add fibs like this to sell the 50 and 61.8 because this one wasn't confirmed. It was here based on this support broken. This was our lower low and this is our confirmation and initial lower low. We cannot use this fib to add position because it's the bigger swing, but we will use the swing that really formed the breakout. So we could use this one, sell the 50 and 61.8. Initial profit target could have been 127.4, 161.8. Just do the math and see if you will have here at least 1 to 3 risk reward ratio. In this case would have been a 55 stop loss, and your profit target would have been here 90 pips and here 170 pips. So it's not enough. You shouldn't enter here short because you don't have at least 1 to 3 risk reward ratio according to your fibs levels, sorry. Okay, so you shouldn't enter here short. You should have waited, and you've waited until here. Here not enough retracement, here the same situation here, but here you've got triggered the position, and of course you've done the math and you've spotted that the opposite Fibonacci 161.8 would have been, according to your money management, a 1 to 3 risk reward ratio. And in that moment use your pending orders, sell, initial stop loss level, and your profit target, let's say here. That's it. Might look like a long explanation.
No, it's good stuff because I never really look at it that way in the long term. But Yeah, I'm definitely gonna try to document it because um s- see, starting out new trading, right?
Yeah,
Right? You Most people starting out new trading, their focus is like, hey, I want to make that money quick.
it's impossible.
I want to make that money quick. But once you start making that money quick, it's almost like it's like trying out something and you get drained first.
Yeah,
And then when you get drained first, you take a step back and say, okay, no, I have a taste of the pie.
yeah,
No, you know what? Working so hard for the pie, it's not something I want to do.
yeah,
Okay, let's take a step back and see how I could work smarter. Yeah.
yeah,
It's almost like the job what I'm doing right now. It's like, okay, yeah, I got a raise. And now it's like taking a step back and say, okay, I got a raise now, but I'm working much more harder than what I was doing before,
yeah,
kind of thing. So this approach that you're saying is really good because for me to see it ice, I had to experience it. And since I've been experiencing doing the fast trading and stuff like that, and I experience it, it's a lot of work. So now it's like stepping back, and because of my time, it's like saying, okay, how could I work much more faster?
yeah.
Because if you had said this before, I would never get it.
I did
But
in all my previous video is this one.
yeah, I know,
But you didn't
I
have
know.
your
But
eyes
now,
focus on this.
since experience it, it's more like okay, it makes it's kind of hit me much more now better because it's not the fast pace as trading as I was doing before because it's much more like a better and a simpler approach to it,
I can
right?
promise you, based on my experience, that this one will offer you less stop loss hits, also a bigger risk reward ratio per trades than you've done it before, and also much more profitable than any of your strategies on lower time frame. But you need to see it, you need to see how it's working before putting to practice with lots of money.
Yeah. You see what kind of um make it much more effective is the rules. Once you give them the rules, right?
Yeah,
Like you said, 4 hour. And you give them said 4. Do not use 1 hour, 4 hour.
yeah. Pending orders here, take profit here only if the risk reward ratio, if not, use the next one, 161.8 level, and so on. Yes, I can imagine that because I've mentioned this in all my previous videos. Not everybody saw it because you, for example, didn't had that patient, you know. You wanted money fast, you wanted to start with less money in your money account, you weren't aiming for this kind of trading back then. That's why you didn't spot it.
Yes, and that's the thing. The thing is the the thing is a lot of people can't start out with that much money. Now, being there now since I made that much money doing the fast pace, right? And have keep some in my account. I could afford to put away now to for investment,
Yep.
right? Before it was hard because I never had that money to invest. It's like trying to say, okay, you know what? I'm going to try to come up with $1,000 to invest
Yeah.
and then have a family. I didn't have that money to invest. I could say, okay, you know what? In my budget, I could budget for 250 to 500 bucks
Yes.
for trading because that's the money I could afford to put away to lose. And so I guess what your students is experiencing students saying, hey, I want to learn this thing, but I don't have the $1,000 to $2,000 to trade the longer term. kind of thing. But what you did kind of make it much more approachable because you basically defined the certain rules and stuff. So my feedback when I'm feeding back hearing you what you say, right? For you students, right? All you teaching it, right? It's good stuff, but they won't get it. And the reason why they won't understand it because their main focus, okay, how could I take $250 or so
Yeah.
to make a lot of money, right?
It's simple based on my way of teaching them.
Yes. So I think the approach that we probably could take right for future to say, hey guys, or change the money management a little bit and say, hey guys, how much could you afford trading, right? And then based off that, right, you could pinpoint the time frame or say, hey guys, based on what you won't be able to do it. Based on my approach, you won't be able to do that based on my approach because when you first teach him, my thought was okay, good. I could learn this thing. I could put $250 in the bank to trade and stuff like that. And then I start trading off the higher time frame. Then trading off the higher time frame, I try to do the money management. It's like, wow, if I do certain things, it's gonna kill my account. So I kind of drop down to a lower time frame and say, hey, you know what? How could I take your training and put it into to certain practice? And that's where I come up with the candlestick trading kind of thing to tie to the candle to make it much more cheaper regarding a cheaper way of the cheap man way of trading basically.
Yes, yes. You've lowered the time frame, and this was your initiative. I didn't had anything to do with it, so I cannot take credit for your decision. It was your decision, your money. You've done it. You had success with it, and I'm happy about it. But
But the
what?
thing is,
Yeah.
yes, you have a lot to do with it. I'm being honest with you because the approach, right? The approach that you put regarding like the 61.8 and 50 and the fib give me a good idea, a good concept to build on it to say, hey, you know what? Let me see if this could work in a lower time frame. And it did work in a lower time frame on candle because based on based on looking at the line and trend line, right, on all this, if you go to a monthly candle, all of this will be like one monthly candle.
Yes.
And a retracement back to the 61.8 on the monthly candle.
Yes, you've respected the same strategy, but you've lowered the time frame. This strategy could work even on 1 minute chart. Uh,
Yeah.
what I'm afraid of regarding students, if they will use 5 minute chart or 50 minute chart like you did, is that they will be stopped by using this swing. They will be stopped not because this strategy isn't working, because it's working on a long run based on
Yes.
statistic, but they will be stopped many times during news,
Yes.
and will be really difficult for them to see the setup, to see the opportunity to enter, and then they have to check the news for that certain pair, and they will start to question themselves, oh, this news will affect my USD or will affect my Australian dollar, or and they will start to be confused, and they won't trade, or they will trade with negative results. That's
Yes.
why I said shorter time frame, it's not suited for them. I trade even on 15-minute chart sometimes, but my entry is on that time frame because I want a smoother entry.
Mm-hmm.
My stop loss, it's still on a 4-hour chart, and my aiming for profit target could be even for weekly. That's why I said my risk reward could go around 1 to 20. This sounds magical in trading Forex, but it is possible.